This is our Forex blog for July 2nd, 2014. And, there's a lot of different ways of trading with our software. There's short-term trading, longer-term trading, swing trading. Our focus, ourselves, with our own trading and our automated systems are short-term, intermediate, time frame, intraday, scalping to 3 to 5 hour trends. We're looking to catch 5 to 50 plus pips, with 5 or 6 pip average losses. But you can use our currency indexes on any time frame. This is a 5-minute dollar index. It lets you see visually what all the dollar pairs are doing, what all the euro pairs are doing. And basically, in a nutshell, if you see the euro, kind of going sideways, breaking down underneath its hourly moving average, it's underneath the balance point line, which is basically VWAP, volume weighted average price. This is where most people have positions in all the euro pairs for this time of the day. Beneath all those, basically filters, you want to look to sell. Above it, you want to look to buy. So the euro's weak. Well, you can see the yen is strong. It went from underneath to above its hourly. Unfortunately, the weekly and monthly trend is down. Ideally, you would trade a currency like the pound that has all time frames up. And then basically you want to buy the strong versus the weak. Or if the euro is weak and the pound is strong, you want to sell the euro pound. So if you bring up the euro pound, you will see that this is most definitely falling earlier in the day, and you're looking for sells. Now this one's kind of going around, chopping around, so you have a nice little, rectangle pattern. There's really only two patterns we look for: I would say hour and a half to 2+ hours sideways rectangle pattern breakouts. And you can see if you put your stop above the range high, the risk versus reward is in your favor. And our currency index basically lets you know way in advance that this is the likely direction. And that's, the reason why we use this. The euro, is kind of trending up. It's underneath last week's most actively traded price. Which is another tool that most products, trading software platforms don't have. It's underneath there, can't get back above. It's very likely to go down. You know this, around 235. If you look at the chart, hour and a half later, it goes down. And that's, the predictive nature of our software. Now also the yen, it was kind of going sideways here. It wasn't super weak. It wasn't outside the lower bands. And it breaks above the hourly, it's likely to go up. And it's also, most of the time it's going to reverse or go sideways at these bands. Especially if the longer term trend is down, it's very likely to stop going up here and resume its downtrend. The lower bands are less likely to work because the daily, weekly, and monthly trend are all down. There's less likely to be buyers at the lows. I mean, there's more likely to be sellers at the statistically likely highs. But until it gets to that upper area, the euro is down, the yen is up. You want to look for euro-yen buys. I'm sorry, euro-yen sells. Weak euro, strong yen. So starting the day off, this isn't really much of a pullback. This isn't much of a pullback either, but it went up a little bit and went sideways, wasn't able to go higher. It's very likely to go down. And, the only real secret to trading is small losses and bigger wins. And when you catch the occasional 8 times or 10 times bigger win versus risk, or even 3 times and 5 times bigger win than risk, if you have, 2 times more profit than your risk, 3 times more profit than your risk, sometimes you're going to make less than what your risk is, but your average win on all your winning trades is 1.5 to 2 times or more what your average loss is. You don't even have to be right half the time in order to make money. And that's the key to trading. So it allows you to pull the trigger and take trades with very little stress or anxiety. Here in the Swiss, trend is down, it's underneath the hourly, comes back up and has a little double top right here. Can't get above that level. Breaks down in this little, sits sideways for 4 or 5 hours, breaks down. That's a trend that's very weak. The pound, you saw, was strong, and the yen was also strong, but the longer term trend of the yen is down. So you can buy the pound Swiss. And you know this ahead of time. Most of the time you're going to take these trades, and this is your risk. You put your stop underneath the low. I meant to put a little circle on here. And this is, the maximum profit, which is over 35 pips. But you have 3 times, more profit or potential profit than your risk. And even if, it kind of pulls back a little bit and you get out right here, you got 1.5, 2 times more profit than your risk. And that's what makes trading profitable. That's what distinguishes the difference between trading and gambling. And the currency indexes can be used in so many ways. Here is a low and here is a high. Notice it pulls right to the 50% Fibonacci area, which happens to be the hourly moving average. Has a little double bottom right here. It has an extreme pullback for that time of the day, and it has a divergence. That's a little bit more complicated method, but at 9:30 it's likely to go up. Now unfortunately the weekly trend's down, the monthly trend's up. It's mixed. If the weekly and monthly trend was up, this would be probably 80% probability of going up. But you can see right here around 9 o'clock, this one's likely to go up. Let's try to find a currency that's weak at that time and one that's likely to go down. Well, you can see the CAD's breaking down, but the longer term trend is up. The Swiss has pulled back up, and it was trending down earlier. The New Zealand Swiss, pretty high probability one to go up, just from looking at these at 9 o'clock or around 9. And as you can see on this chart, it's kind of just slowly drifting up. But you buy this little pullback of the trend line break, you put your stop underneath the low. Your risk is super, super tiny, and the reward is many multiples. Now, even if you got out after an hour and 30 minutes, you made 2.5 to 3 times more profit than what your risk is. And that is, again, the key to trading. Here, let me just showcase some of our currency signals. These are made up of about 418 as of today signals. This one went long right here and got stopped out. Tiny loss. Long right here, stopped out. Tiny win. Tiny loss. Bigger win. Bigger win. Much bigger win. Unfortunately, tiny loss. Got that loss back on this one. And a small win right here. If you add all that up, it has bigger, more wins than losses.